ATKR, was founded in 1959 and is one of the top industrial suppliers in the U.S. It produces and sells a variety of products including electrical conduits and fittings, metal framing and fittings, mechanical pipes, modular support structures, etc. It offers its products under the sub-brands Allied Tube and Conduit, AFC Cable Systems, Heritage Plastics, Unistrut, Powerstrut, Cope, Calpipe brands, etc. The company is benefiting from a variety of tailwinds such as a strong recovery in the industrial sector across the globe, a looming housing inventory shortage, expectations of strong capex spending, and the recent passage of the infrastructure bill. Further, the company is a leader in its categories, which is resulting in pricing power, boosting the company's margins. Strong position. The company has a dominant market share in several of its categories. And these products are essential for any construction or infrastructure project. This makes ATKR one of the best stocks for an inflationary environment as it is able to pass on price increases to its customers. Additionally, ATKR's management has demonstrated an ability to continually grow organically and through acquisitions of competitors, offering similar products. As a result, the company's earnings and free cash flow have quadrupled over the last 4 years. Earnings momentum. 2021 was a strong year for ATKR, with its stock price gaining more than 150%, but this gain pales to its EPS growth of 300%. In 2022, I see further gains for ATKR as demand will remain strong due to positive trends in infrastructure spending, housing construction, and capital expenditures. In terms of infrastructure spending, there is expected to be a cumulative $11 trillion in infrastructure spending over the next decade by governments all over the world. Of course, the US government just passed its own $1 trillion plus package. Housing is another bullish area with a looming shortage given low inventories and the millennial generation entering their 30s and 40s. Similar to governments and households, businesses are expected to increase capex spending over the next decade. This year, capital spending is expected to grow 15% and continue growing at a double-digit rate. The pandemic revealed that our supply chains are quite fragile and haven't kept up with the world's demand growth. This is evident in multiple areas such as energy, semiconductors, and autos. ATKR will be a major beneficiary as companies invest in increasing and maintaining capacity. Attractive valuation. ATKR's explosive earnings growth also means that it's a rare growth at a reasonable price opportunity given its forward PE ratio of 13, which is significantly cheaper than the S&P 500's forward PE at 21. Further, ATKR has higher profit margins and higher growth rates when compared to other stocks or indices. For example, the S&P 500's profit margin is 7%, while its revenue growth in the last quarter was 11%. To compare, ATKR's profit margin is 23%, while it had 94% revenue growth in the last quarter. Power ratings. ATKR is one of the top-rated stocks according to the ratings with an overall A rating, which equates to a strong buy.